Hello everyone. As many of you are probably aware, almost exactly 4 years ago at this point, I uploaded a video called The Hollywood Crash is Coming. A video essay in which I mostly agreed with Steven Spielberg's oft-discussed idea that the increased emphasis on big-budget, tentpole superhero blockbuster movies would lead Hollywood to eventually undergo a crash, much like it did at the end of the 1960s, which brought about the new Hollywood of the 70s, giving us filmmakers like, for instance, Steven Spielberg. The video got shared by Max Landis, it became my most viewed video by quite a large margin, and to this day, I still get comments from people on the video, most of them either saying that the real reason Hollywood is ending is because of feminism or pedophilia or the Jews, or that I'm a big dumbass and that all my observations of problems in the film industry aren't true because movies are still coming out. I rewatched the video a couple months back for the first time in a long time, and ever since then I've wanted to do something of an update to it, or like an addendum. Not in the traditional video essay format, I kind of just want to talk, but sort of just discussing which things in the video I think hold up, and also introducing some new things that I've thought about in the years since I made it. So that's what this video is, a little revisit of my Hollywood Crash video. I'm not really going for a big, prediction or a big point like I was in the original video. I'm mostly just kind of here to discuss what I talked about in the first video in a little bit more detail, and hopefully introduce some new interesting points. So let's get into that. I would say that looking back, I still mostly agree with my central thesis in the original video, that the way the film industry is set up is unsustainable and comparable to things in other parts of our economic system, and that theatrical movies will likely soon be about as expensive as going to a major theater production, with only a few dozen big-budget movies playing in a smaller number of locations than what we have now. What I think has not held up as well are some of the specific conclusions that I made from that, and my way of explaining it. So, what is our situation? Basically, more and more of the annual domestic box office in America is becoming dependent on an increasingly small number of big-budget, tentpole movies that are made to be inoffensive, not just culturally, but in terms of aesthetics and ideology, to as many people as possible, and to be easily distributed to foreign markets, as well as to satisfy a bunch of ancillary markets, toys, video games, TV shows, comic books, various merchandise, which almost pretty much all the time the studio has some sort of investment in. And the health of the studios is dependent upon these movies making a huge return on their huge investments in an industry that is notorious for being difficult to break even. This results in more and more blockbusters having to be event movies, where hundreds of millions of dollars are spent on ad campaigns and promotional deals and famous actors to advertise the film and make it a huge deal so people actually feel the need to leave their house to see it. And while individual films have been breaking box office gross records year after year for the past decade, this is mostly due to the inflated price of tickets, and actual ticket sales have been going down consistently since the 1980s, and particularly fast in the past decade and a half or so. This decline has come in tandem with the emergence of new technologies and alternative formats of entertainment that you all know and love: VHS tapes and later DVDs, video on demand, Redbox, Netflix, YouTube, live streams, piracy, just the internet in general, basically. The decline in sales creates an inflation of prices of both tickets and concessions, the latter being the only way the actual theater venue makes its money, as bigger studios like Disney take more and more of the box office gross to guarantee return on investment, sometimes up to 75 or even 90% of the box office gross the first few weekends. As film companies buy up more and more studios and distributors and exhibitors and ancillary markets, the major decisions of which films get produced, and even what kind of stuff is in the films that get produced, come down to executives, with methods of determining what will make money that are unproven at best, as the box office performance of a film is the result of a large confluence of disparate circumstances, and there is no such thing as a science to predicting what will be a hit, other than what has already made money. until it doesn't. This is what has given us the glut of superhero movies and reboots and adaptations of popular franchises and recognizable properties from the near past. All of these are things that I mention in some way or another in the original video, and they are all true. What I think my previous video is weak on is actually explaining this circumstance, and what we can learn from the material reality that has brought us to this point. So let's talk about that reality. The film industry is this way, but why is that? The short answer, as I'm sure will not shock you, is money. The long answer is the rest of the video. So it all stems from two little things called corporate conglomeration and vertical integration, the merging of large corporations and the monopolizing of all stages of production in the industry under those corporations. It is a trend that can be found in most American industries since the 80s. The film industry, like many industries, has become increasingly financialized as a result of two primary changes in American monetary policy. First, in 1973, when Richard Nixon ended the gold standard for the US dollar and made it a floating currency, and second, in 1979, when the Federal Reserve began raising its interest rates to their highest levels to combat the inflation that was created by the former decision. The latter move created the recession of the early 80s, purged the American economy of fixed capital, that is, investments in real physical assets like raw materials or overhead costs that had become unprofitable, and propped the economy up with investments in financial instruments like stocks, bonds, futures, equity, currency trades, derivatives, and everyone's favorite, debt. The trade and management of all of which were all heavily deregulated by the Reagan administration, along with the deregulation of industry and the diminishing of the political power of unions. There's lots more to know about everything that I just said, but suffice it to say that this has led to the economy that we all know and recognize today. One that is increasingly financialized and separated from actual labor and production, and all the consequences that come with that: stagnant wages, frequent market disruptions, huge corporate profits, the outsourcing of jobs in manufacturing, the completely severed and tumultuous domestic supply lines that we're seeing now with the pandemic response, low taxes for the wealthy, a diminished social safety net, and the majority of people living paycheck to paycheck in the richest country in the history of the world. All of the things that people love about being alive today. Industries in unprofitable sectors cut costs and raise profits for shareholders by contracting out work, reducing pay and benefits, and by being propped up with investments in other markets. Hollywood has followed this trend quite closely. As an example of the trend, let us look at one of the longest leaders in the industry, Warner Brothers. Its founder, Stephen J. Ross, turned his father-in-law's funeral business into Kinney National Services, a conglomerate managing funeral homes, a car rental agency, parking lots, garages, and building maintenance. He then, at the end of the 60s, purchased the talent agency Ashley Famous and Warner Brothers 7 Arts, a television syndication company based in Toronto that had itself just purchased the Warner Brothers Film Studio, which had fallen on tough times, as had most major studios at the end of the 60s. He sold off the Kinney part of the business and renamed the company to Warner Communications, then proceeded to purchase television stations, a vast film and television library, DC Comics, a cable provider, a home video production house, the world's largest record company, and a film distributor. In other words, it had acquired all of the distribution systems for each of the product lines that it owned. By 1988, the company bought stakes in 3 major theater chains, giving it enough cash flow to purchase Time Inc. to create Time Warner, its assets now including HBO, Time Magazine, People, and Sports Illustrated. Ross called the merger essential to the competitive survival of American enterprise in the emerging global entertainment communications marketplace. Isn't that a lot of words? Other studios soon followed suit with these big corporate mergers, including News Corp, Universal Pictures, the Walt Disney Company, Comcast, Paramount, you name it. The entertainment industry, from the studios to the distributors exhibitors to the exhibitors increasingly came under the control of an ever-shrinking number of corporate entities with their business decisions guided by executives and shareholders looking to do what the new financialized economy and the rules of corporate capitalism demand that they do: increase annual and eventually quarterly stock values. This created an obsession with creating what were known as synergies in corporations, that is, investing large amounts of money in purchasing assets and making mergers in the right confluence of sectors and companies and circumstances so that these investments naturally bolster each other and create maximum profit from each asset. Problem is, as I said before, despite what these corporate ghouls will have you believe, there's no repeatable science to the economics of the entertainment industry or of the financial sector, and so these mergers were often more problematic than they may have guessed. Disney's purchase of ABC in the mid-90s left them with full channels that they could barely afford to produce content for, and it wasn't until the premiere of Who Wants to Be a Millionaire that the channel had any viability against the other major cable networks, and to this day it is still usually surpassed by NBC and CBS in viewership. But probably the most notorious example of how stupid this culture of hyper-financialization and creating synergies is Time Warner Cable's merger with AOL, by which I mean AOL's purchase of Time Warner Cable. AOL had been taken from a small dial-up service in the 80s to one of the most prominent early internet providers in the 90s by the billionaire Steve Case, and the dot-com bubble of the late 90s had inflated the price of its shares to more than twice that of Time Warner shares, despite the company having about 1/4 of the other's revenues. With a market valuation of $342 billion, making it the fourth most valuable company in the country at the time, AOL merged with Time Warner and acquired a majority interest in the company, and business leaders praised it as one of the best corporate merger decisions and creation of synergies in recent history. But then, the investment bubble for internet companies popped, their share prices all plummeted, and by the end of 2002, AOL Time Warner posted a loss of over $100 billion in stock value after failing to offer broadband internet access to its customers, losing subscribers to companies like Comcast, and also failing to create the synergies it envisioned with Time Warner's numerous old media assets that it had acquired. While few of the other major studios have had corporate blunders quite this massive, this sort of boom-bust cycle of exasperated investment and mergers followed by huge losses of value and having to rearrange everything, and of course the laying off of thousands of workers, can be found with basically every major entertainment corporation since the 70s. Over time, like most industry, the entertainment industry has responded to its loss in real sales, real production, not just by increasing prices, but by further investing in financial instruments and ancillary markets like toys and merchandise to prop up their share value and keep the top of the company, the machinery of the company, chugging along. As a result, with the release of every major blockbuster are 1,000 little gears turning all around the corporate world to make sure that these massive investments turn a profit. When the plan doesn't work and a big movie goes bust, it's usually expenses affecting workers that get cut while the company invests deeper to offset its debt. And at this point, the box office revenue of films produced by the major studios is one of their smallest and least reliable sources of profit. Now, you could say that this is all just a much wordier and more detailed explanation of the phenomenon that I described in the original video, and you would have a bit of a point, but there is a reason that I'm specifically explaining things in this way. The set of circumstances I have just described is certainly convoluted and unsustainable. It's propped up by flimsy business decisions and massive investments in an economic system that is by its nature and design tumultuous and prone to crashes. And if you have any doubt about the ridiculousness and short-sightedness of the decision-making behind these big studio purchases and mergers, or about just how many creative decisions about individual films executives are informally privileged to make, just read the book Disney War about Michael Eisner's time at Disney as CEO. So yes, I was correct in the original video that these circumstances are a dumb way to run an industry, but I think I was unable to come up with a satisfying analysis of the situation because I wasn't thinking broadly enough in diagnosing the problem. Because this situation is not at all unique to Hollywood, and it is not really a problem that Hollywood could fix on its own, at least not in the way that it's set up right now, because it's a problem that is endemic to this era of capitalism, what some call late-stage capitalism, but I will be here referring to as neoliberal capitalism, as that is the guiding ideology behind the policy changes of the 70s and 80s that I mentioned earlier that sort of begot these circumstances. While most CEOs of major film studios at least have some interest in media, they are primarily just business people, with no real regard for or incentive to make good movies, or even necessarily movies that people want to see, and who often make decisions based on total misreadings of trends and ill-informed ideas of audience desires, hence things like the cinematic universe based on the Universal monster movies that never became a thing, or Sony executives in their emails wanting to make a Spider-Man movie where Peter Parker uses more memes. And the reason this is unsustainable is the same reason the entire system around it is unsustainable. It keeps the majority of people in a state of economic precarity because that is what props up the financial sector, but it can only keep doing that for so long before that starts affecting some things. The inflation of ticket prices is sort of a feedback loop. The decline in sales happens in tandem with Americans having less disposable incomes and movies becoming more expensive. Ticket prices rise, and that in turn drives down sales as fewer people can afford it, and it kind of just goes like that in a cycle. And this reality can be shown pretty starkly in the difference between the movie theater scene currently in the US versus China, which has recently had an expansion of its middle class, with over 100 million people with new disposable income, and as a result, an expansion of movie theaters in that country in the last decade. Meanwhile, after accruing debt that it can't pay back because of low profits for years, after just a couple of months of depressed theater going due to the pandemic, AMC Theaters, the largest movie theater chain in the country, is set to default on its loans and maybe go bankrupt later this year, and it is expected to be bought out by none other than Amazon. So what does all that mean? Is there going to be another Hollywood crash? Well, we'll have to wait and see how it pans out as far as actual revenue. The pandemic lockdowns have shown that people are more than fine with paying for video-on-demand releases of movies they can't see in theaters, and streaming services are the new hot sector that much of the industry is trying to capitalize on. So I think it's safe to say that the decline in movie theater attendance in America will only be exacerbated, at the very least in the short term, by what's happening right now. So is this the next Hollywood crash? Well, yes and no. Hollywood is likely to crash insofar as the ongoing economic crisis will affect the industry. It will leave people with less free time and disposable income to go to the movies, as well as to spend on the ancillary markets that these franchises also rely on, particularly, Disney's biggest moneymaker, theme parks, which will only further drive up ticket prices and accelerate the decline of movie theaters, who will just have to keep selling $15 popcorns and adding gimmicks like 5D and seats that blow you to convince people that it's worth leaving the house to see Spider-Man 7. But do I mean a crash as in Hollywood will go away, or one that will look like the crash of the 60s? No. If the situation I just described is in fact what happens, and I don't know, then the film industry will do what it has always done. It will increase prices, lay people off, and restructure their investments to keep the company afloat until the market stabilizes again, which will likely not come from, Americans suddenly having more income or suddenly loving going to the movies a lot more, but, from a tax cut, or the further conglomeration of major corporations like Disney or Amazon buying Netflix or something. If a Hollywood crash happens, it will be within the context of a greater economic crash, because it is as intertwined with financial capital as any other sector. And like with every crash, the underlying problems won't be solved by the reaction to it, but the big boys in charge will, move some numbers around, and, make the money printer go burr, so things eventually level out and the line starts going up again, until the next crash, and the next one, until either, nuclear holocaust or the heat death of the universe, whichever comes first. If the movie theater chains do go out of business, it won't be because they don't have enough money to be closed. It will be because, like every company, they are a hodgepodge of debts and loans that can only ever be repaid if they are constantly making more money than they did last time. And this focus on short-term returns is what drives the collapse of other industries in a time of crisis, like the subprime mortgage crisis that sparked the last recession, or the current collapsing of the oil sector. This would be a very different scenario than the crash of the 1960s, which was a little more cultural than economic. While similar in that it was primarily driven by the introduction of new and more appealing technologies, most notably television, the decline in ticket sales for the 60s was from a lack of audience interest, generational audience interest in what was being produced, not from a general economic decline like this one would. The generation that came up and eventually created the new wave of Hollywood were, the post-war boomers, generally a kind of more well-off and, head start sort of generation than mine. And that generation of, newly college-educated young people with disposable incomes was not interested in the lavish musicals and historical epics that had been so profitable for Hollywood through the 50s, throwing the studios into dire straits until a new generation of filmmakers, many of them with backgrounds in the more popular and more experimental television sector, and influenced by Japanese and European New Wave cinema, began creating pop entertainment that appealed to their sensibilities. Which presents the question, do people want the movies that are coming out right now? And this is one of the things I think I got wrong in my original video when I said that Disney is doing well because it knows what audiences want. So maybe this is a distinction functionally without a difference, but the real secret to Disney's success is in how many different widely popular and already known properties it has purchased in the last few decades, and how many profitable ancillary markets it has invested in: toys, video games, music, TV, and most notably, again, theme parks. While I don't doubt that people like Marvel and Disney movies, especially children, genuinely, it is a little bit like people liking McDonald's when it's one of the only places nearby to get food that tastes good. Fewer and fewer studios make all the movies over time, as I have said ad nauseum at this point, and they only release stuff that is a sequel or an adaptation of something that has already made money in the past. So this is the stuff that is available to people, and they, for anything more niche or lower budget or less spectacular, they'll go to Netflix or YouTube. People's tastes and expectations for what they consume is entirely mediated by the material reality around them. And while media ownership has always been fairly monopolistic, it has never been more concentrated than now. This gets at another reason that a new Hollywood crash would not resemble the one from the 60s, because the latter happened at a cultural moment that cannot be duplicated. There is a real generational rejection of hegemonic pop culture, and the, material, economic, and social reasons for that rejection are widely documented and explored and interpreted. I'm not going to do that here, but it happened. A rejection of hegemonic pop culture, hegemonic American ideology, represented in the counterculture of the 60s. But with New Hollywood and everything after it, in film and music and every other area of culture, that counterculture was co-opted and repackaged into pop culture, and that generation has grown up steeped in that repackaged culture and has passed that down to every generation after it. So now, that process of co-opting and repackaging of anti-hegemonic tendencies happens almost instantly in our culture, so that any new popular sentiment, no matter how anti-capitalist, no matter how against the system, just gets consumed into the culture and becomes another brand. This is why we now have a pop culture that only seems able to reproduce or repurpose cultural products of the past. So as long as we have a culture that appreciates superhero movies and, nostalgia and the other similar tentpole movies, no matter how fucked the actual industry gets, we'll be getting those things, and they will be the movies that come out in theaters, even if they are the only ones. And assuming that the general economic and cultural order of the last 20 years or so stays in place, which I think is a fairly safe bet, then, that's what we're probably headed for. Only a few dozen major theatrical releases per year, most of them being your Disney and Marvel and Despicable Me movies. The rest of everything else on streaming, and the whole thing propped up with, private equity shares, pay cuts for the rank and file. In other words, an extremely similar but slightly shittier version of what is going on right now. And the best part is, all the people who blame Hollywood's problems on the Jews and the feminists and the pedophiles will still be angry. As Hollywood continues to decline in terms of real ticket sales, but all the same people are rich and in charge. The material reality that they are reacting to by saying that, it's all Jews, it's all the feminists, blah, 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 will all be the same. It's kind of like Children of Men, where an apocalypse can have happened already or be in the process of happening, but still on the surface look like the, regular everyday motions of life are still going, just because those huge titans of corporate America are still around and still have power, and the same people who were on top before everything changed are still on the top. So what I will say is that I can't imagine that the circumstances befalling Hollywood currently will get any better, barring a complete overhaul of not just the industry, but of the entire system. Which brings me to the final point, which is, how could one possibly fix this? So like I said, I pretty much stand by my original vision of what a Hollywood crash would look like in a lot of ways. I guess I was a little too hopeful that everyone would eventually get as sick of Marvel stuff and Disney remakes by 2020 as I already was at that point. So what do I think? I mean, here I am saying all these things about how Hollywood sucks. Well then, how would you do it differently, asshole? What would I do to change these things? Well, as I said, none of this will probably ever change without a total upheaval of the entire system, so this is all very flight of fancy stuff. And obviously no scenario will be absolutely perfect for everybody, but it's not like I necessarily want a film industry that, never produces a movie that I don't like or think is boring. Films were also developed as a business, at least in America, and removing the profit motive from the production and distribution pipeline, which I think is ultimately what you would need to do to completely fix the problem of the corporatizing of filmmaking at this point, would have to come from a total recalibration of our approach to not just making movies, but to work more generally, going to work. A transition from corporations and other hierarchical sort of structures to, worker co-ops, something of that nature. It would have to be something like that. So barring that being said, there are a few changes that I think could feasibly be made, however unlikely, that could make things a bit more palatable for me personally. First, break up the big studio corporations. Vertical integration and the need to satisfy ancillary markets, i.e. the need to only make movies that can easily have toys made from them, not only make for mostly boring and repetitive movies in my opinion, and aesthetically and artistically bankrupt movies, but it also turns nearly every major film into a huge risk for the industry. If the circumstance I just described, where there are only a few dozen major movies released in theaters per year, if that becomes the case, then it would only take 3 or 4 big-budget movies in 1 year, not even flopping, but just not being blowout successes, for an entire studio to go into a tailspin. Tethering the industry to finance has only made it more precarious and toxic for the people working in it, and I'm sure there is some way to arrange the studio and distribution system so that people can still make money making movies and working on movies, but we don't have to run the studio based on neoliberal corporate ethos. but the task of figuring out what that setup would look like is for someone that is much smarter than I am. 2, start having state funding for the arts, and maybe the creation of a film board. America's federal endowment for the arts and humanities is pretty minuscule, almost to the point of non-existent, and in general, I would describe the last several decades of American culture as being exceptionally anti-intellectual. The US is one of few major countries to not have a national film board that produces and distributes films with public money. So, let corporations make their popcorn flicks, but maybe also have public money put toward the financing and distributing of work that is interesting or challenging or could stand as an exemplar of American artistry and culture untethered to commerce. Something that America can give out to the world that doesn't necessarily have to do with making the most money possible. I know, it's crazy to think about. Although I kind of scratch my head trying to think of what exactly modern American culture would be without commerce and consumerism, but again, that's up to someone much smarter than me. Thirdly, and this one sort of goes in tandem with the last one, make at least some movie theaters public spaces that are more akin to museums or art galleries, places for exhibition and study of an art form rather than for the consumption of products. Maybe showing publicly funded works, local works, curated showings of older or underground material. I think there may be a cultural reason that anecdotally American movie audiences seem to have become more rude and rowdy in recent decades, and I think if that's true, it may have something to do with how most Americans view movies, especially in the modern day, as, just another cultural product on a screen to passively consume. And while I'm sure there are plenty of rowdy audiences in Europe, and while I'm sure, Europe is not, separated from the, neoliberal capitalist hegemonic order at all, I think it's pretty clear that European film audiences have a different relationship with cinema than American audiences, just historically, partially because their states are involved in the promotion of art made in that state, including films. Whereas throughout its history, America has always approached films almost exclusively as a business. And like I said, there's no real data I've seen on that phenomenon, so this may be an entirely moot point, but I think my suggestion still stands that a reorientation of the public's view of film and art in general could make American culture a little less empty and artistically bankrupt and manufactured and repurposed. But that's just me. I really just wanted to revisit this topic of the Hollywood crash and expand upon it a little bit more because I do think it's interesting, go into the material context of what's happening and just sort of the state of things, especially in light of the pandemic, which has really upended the industry, even if only temporarily. I don't really know where any of that is going to go, but I do think it's interesting to talk about. And I'm sorry this was much longer than the original Hollywood crash video. I just really wanted to give these ideas some space to breathe so I can actually talk about them and not try to, make it a quick, snappy, snarky, cool video or whatever. What? I didn't forget to say anything in the original recording, and this is the day after. I just wanted to shout out this book, Hollywood in the New Millennium by Tino Ballio, is where I got a pretty good chunk of the information that you heard in this video, especially the more specific things about how Hollywood reoriented itself since the 90s in this era of corporate mergers. If you want a lot more detail of the last 20 years of film production and finance and distribution, then this book is good for that. And by the way, I would like to thank my patrons, as always. Their names will be coming up on the screen next to my face right about now. Thank you, as always, for supporting the channel. You guys know you will be getting a special patron-only video, at the end of this month. Also, I wanted to say that all of the Patreon money that I got from last month and any that I get next month will be going to the Minnesota Freedom Fund for the protests in the Twin Cities. So, also just donate to those in general. I would love to do a live stream, like charity live stream, to raise money for like maybe the bail funds for the protests here in Philly. I don't know. I would love to do that. I want to like gauge audience interest in that. So let me know what you think of that. Thank you for listening to me ramble for a million years, and I will see you soon for some more cool stuff. So thank you for watching. I'll see you next time.